Welcome, everybody, and in particular, welcome to our special guest all the way from Vancouver, Galen McNamara. Thank you so much for coming on the webinar.
Thanks for having me on, John. I thought it was an interesting idea when you suggested it, so I'm happy to join you.
You're our first non-Aussie geo on the Lowell Lodestars Drilling Deeper webinar. So I hope we get a few North American audience members tuning in and watching this online later as well. So what promises to be a really interesting webinar. We're going to be talking about a commodity which has got some amazing fundamental drivers in uranium. Just by way of setting out what we're going to do, we've got two or three main sections of the webinar. Firstly, I will say a few things and show a few slides, just setting the background about the uranium market. And Galen has promised to provide some of his insights into the market as well. Then we'll hand it over to Galen for the real meaty bit of the webinar, his career, his insights into exploration, particularly in the uranium sector. And finally, we hope to have time for some good Q&A at the end. Okay, so by way of introduction to Galen, he is Vancouver based, so great that he could come online, and the timing works nicely for morning Eastern Australian time, afternoon Vancouver time, not keeping you up too late. Galen has a storied career, winner of the PDAC Bill Dennis Prospector of the Year award for being involved in a major uranium discovery in the Athabasca Basin in Saskatchewan in Canada. Athabasca Basin is really the place to be for high-grade uranium. Nothing else really comes close. And, the discovery that Galen was involved in is one of the most amazing high-grade discoveries of recent times, pretty much in any commodity, but particularly in uranium. Just by way of background, we will talk a little bit about the uranium market. And here's a couple of charts on the longer term and shorter term uranium market. On the left, you can see the market going back 35 years, a big spike up to $140 US dollars a pound around 2007, when one of the big Canadian uranium mines got flooded. One of the Cameco mines got flooded. And then we had 15 odd years in the wilderness. The Fukushima nuclear disaster was in there in 2011, I think it was, and no one was interested in uranium. Nuclear plants were shutting down all over the Western world anyway. And it's only been in the last 3 years or so that we've seen a bit of a renaissance in the market. A couple of years ago, the price ran up to $100 a pound. It's pulled back to around $80 a pound today. But as we'll go through, the fundamentals for uranium look extremely good. Now, on the right-hand side, there are two, if you like, markets or two prices for uranium. There's the long-term contract price, which is shown in the black line there, which is more stable. And then there's the spot price, which actually makes up a fairly small percentage of traded uranium. But it's really the thing that people look at on a day-to-day basis. And often equity prices are driven off that spot price.
Yeah, I would just say here, I'm looking at that chart on the left, and anyone can see that like, look, yeah, we had the big spike up in 2007, and then it was creeping back up in 2011, then Fukushima. But fast forward to the last couple of years, and like it really appears like what we're putting in here is a new base of support, which I think bodes very well, irregardless of the supply-demand fundamentals that I think you're going to talk about here next.
And I think the incentive price, or the price required to bring new mines online, is a hell of a lot higher than $20 a pound. Arguably, it's 75, $80 a pound, at a minimum, to bring new mines online. So I agree that we're looking at a new floor price.
Yeah.
This is the long-term supply demand. You can see demand there, the black line. The colors are the different geographies of source of supply. Now, the pale blue gray is Kazakhstan, which is like the OPEC on steroids of uranium supply. That makes up, I think, something around 30% of global mined uranium. So it is really the big big elephant in the room. And, when you compare it to OPEC, I think OPEC only makes up about 10% thereabouts of global oil supply. So, Kazakhstan is a very important player. And the next, the other important player, of course, is Canada, which is a market dominated by Cameco. And you can see, supply has ticked up, but there's a massive gap between supply and demand for a long period of time. A lot of that has been made up by secondary supply sources. What do they call that? Megatons to mega power or something like that, converting nuclear warheads into usable uranium fuel rods, and other sources of supply have made up that gap. But largely, the analysis that I've seen is those secondary sources of supply have pretty much been used up. So very hard to know where the gap going forward how it's going to be filled.
Yeah, and the thing I really like about this this slide, this figure, and it's such a classic figure that we've seen, and it provides so much insight. But I look at the countries that are listed there, and the ones that we call are on our side in the West, like Canada, Australia, USA, and that's it, right? So look at like there's a big things from Kazakhstan there, but it comes back to this fundamental question of where do we want to get our strategic critical minerals and uranium from? Like, who do we want to rely on? Who do we want our partners to be? And I think, like, pretty clearly, it's probably not a country like Kazakhstan for the long term.
The US is a classic example. I mean, the US is the biggest nuclear power generator in the world. The US, I think, uses around 50 million pounds of uranium out of a global market of 170, 180 million pounds a year, and it only produces 1 million pounds of uranium. So it is heavily, heavily dependent on imported sources of uranium. Now, a lot of that comes from Canada. That definitely doesn't make up all of the US supply. So the US is dependent on other non-Western sources of supply, and I think that makes it extremely nervous.
Yes, that's a problem.
That's just another version of the geography of where mined uranium comes from. Kazakhstan dominating, but Canada, the next most significant player. Australia at about 8%, most of that coming, of course, from Olympic Dam. And then uranium market is a complex market. There's at least 3 stages that uranium needs to go through in terms of processing until it is usable in a nuclear power plant. Mined uranium then needs to be enriched, turned into uranium hexafluoride, and then it needs to be turned into fuel rods that can go into a nuclear power plant. And you can see sources of enrichment. Russia dominates the sources of enrichment. So there have been progressive sanctions being applied by the US to Russian enriched uranium, but it's not easy for the US to wean itself off Russian enriched uranium. So you can see that chart, or that pie chart on the right, where the US gets its enriched uranium. 27% of the nuclear supply for the US utilities comes from Russia.
Yeah.
Very difficult to wean yourself off that.
It's very difficult, and I think a lot of U.S. Lawmakers have recently woken up to these facts of life that it's not a level playing field between domestic producers and foreign producers, because the foreign producers, our geopolitical adversaries, act like a cartel and care much more about market share than commodity price. So they've realized that they have to level the playing field, and this $80 billion, call it bailout, to Westinghouse to build reactors, I think maybe is only step one in uranium, but also in other things, and also and a bunch of other critical minerals. There's a huge focus, and mining is actually in the national conversation now, and that's like the first maybe in my lifetime.
Yes, you can't open the paper. Not that people open a physical paper anymore, but you can't read the paper without hearing about critical minerals, and uranium is definitely one of those.
Yeah.
So in terms of demand, you can see there's over 400 operable nuclear reactors around the world. It's growing strongly and makes up about 9% of global power generation. But in the US, I think it makes up about 30% of US power generation. In France, it makes up about 70%. I think France is the energy market with the highest penetration of nuclear power. China is growing massively, and I wouldn't be surprised to see China, in terms of megawatt hours, go past the US in the next 10 years.
Yeah. And I read something earlier, and I think this is right, but I'm not sure, that, AI data centers, really data centers, are going to take something like 12% of power demand by 2030. I mean, like, it's critical that we win the AI race. Like, it's so critical, and all the energy needs that we're gonna, realize to do that we're just gonna have to swallow to do that. Like, there's really only your nuclear energy. That's it.
Yeah, it's a massive jump up in US power demand driven by AI. For example, I think Microsoft has joined the World Nuclear Association. They're really going upstream to source nuclear power.
Yeah. Yeah.
Yeah, we mentioned the deal announced this week that Trump is going to fund or help fund, I think it'll be 10 to 12 new reactors in the US, which is a massive build out given I think they've only built one in the last 20 odd years. And China is the other place. There's 32 megawatts equivalent under construction in China. So yes, that's more than a megawatt. I think that must be gigawatts.
So this here, if China has 32 megawatts, yeah, gigawatts under construction, so that's probably like something like 32 reactors, give or take.
Yeah.
I mean, and we're only talking about here with this Westinghouse deal, like 10 to 12, right? Like, we're way behind, and I think that the politicians have realized that they need to move extremely quickly. So this really could just be the start.
Yeah, I agree. And finally, the other element in the market is the uranium trusts, which basically are set up to buy uranium and sit on it. And SPUT, which is the Sprott Uranium Trust, is sitting on, as I understand it, about 70 million pounds of uranium, which is about 4 or 5 months worth of global demand. Now, that is sort of a stockpile, but it's pretty unlikely, at least in the near to mid-term, to see that uranium come back into the market. They might sell a little bit around the edges to help with their working capital of the trust, but I think that uranium is locked up, and we're seeing more money go into these trusts, and that money go out and buy uranium, which is another source of demand, if you like. I mean, it sits there, it doesn't get consumed in nuclear reactors, but as I say, it's pretty unlikely to see that coming back. So here's the sort of zinger. This is the World Nuclear Association reference scenario. So you can see that red area. That's the gap forecast between supply and demand over the next 15 years. You can see supply growing. I think there are forecasts that Kazakhstan is going to potentially go to 80 million pounds of supply over the next few years. But demand is definitely, even on a base case scenario, there's another scenario which is much more optimistic, if you like, or pessimistic, in whichever way in terms of the supply gap. But this is a reasonably conservative outlook of what the supply gap is going to look like. So the thing about uranium for nuclear power plants is it's an inelastic price. It makes up a fairly small percentage of the operating costs of a nuclear reactor. They have to have it. They can't not, otherwise the plants will shut down. Any final comments from you on the market there, Galen?
Yeah. Yeah, I thought that was a great summary. And yeah, from the supply side, I can say that it's very hard to find uranium deposits, and we've been underinvested in the sector for maybe a couple decades significantly. So there's some catch up to do, and there's a timeline. Discovery for any commodity is not something that we can just like throw money at and then the discoveries happen right away. It takes time and it takes effort, and you don't know when it's going to happen. Right? So it's yeah, it should be an interesting few years for the uranium price.
Yeah, good. Thank you very much. We'll quickly just turn to a couple of questions that we can perhaps cover off on. First one, just in terms of uranium, is there enough people, talent, and building materials in the world to build multiple reactors? I guess that means, can we build enough reactors?
I think that is a really good question. And like in the US, like we used to not be afraid to build things in both of our countries, maybe in all of our countries, maybe in Australia too, like big projects, like transnational railway projects, big hydroelectric dams, big reactors, right? But like there's a manufacturing expertise that's now lost. But what I think helps fix that is like if we can get SMRs right and modular builds right, then I think we're on the track.
Oh,
It's much simpler.
Yep, that leads into the next question from Adrian Ishman. Keen for views on Australian appetite to develop uranium deposits and then further on using small nuclear reactors, the SMRs. I guess, Galen, you're probably not too got too much background on the Australian appetite for uranium development, but just a quick comment there. Obviously, there's a couple of key states in, similar to Canada, I guess, a couple of key states that are pro-uranium mining. South Australia in particular, has the Olympic Dam, big Olympic Dam uranium and copper mine. But there's a number of states that will allow you to explore, but they won't allow, if you find something, you're not allowed to develop it. And that in particular, that's Queensland and WA. So, yeah, I think, SMRs, Galen, you mentioned them as perhaps one of the keys to unlocking, more nuclear power. And I think, with Australia having a policy of not having any nuclear power at the moment, maybe SMRs are the way into nuclear power for Australia. Yeah, and just we were talking earlier about the announcement by Trump this week of the $80 billion going into nuclear reactor builds, and that really kicked up the share price of Cameco. I think Cameco went up 20 or 30% on the back of that. But we haven't really seen yet the share price reaction in the junior explorers. Any comment from you on that?
Oh yeah, that's a great question, and we've seen this across multiple cycles and multiple commodities. You see the investment interest really at the beginning of bull markets really starts with the bigger companies, right? But when the bull markets get going a little bit, and we all believe that they're going to last, well, the investment dollars then flow down to the smaller caps, and those are the ones that have the greatest torque, right? Especially, in rising tides will lift all boats. But if you can pick the right stock, the right company that's into a discovery, well, then you can really amplify those gains in a way that is potentially life-changing.
And hopefully, we're going to see that coming in the uranium sector, and also the precious metal sector as well.